Students, now we are in question number 4. We can see here that company they had issued 8,000 12% debentures of rupees 100 each, redeemable at par. Whenever you see this term redeemable or redemption, it means that the debentures are to be repaid. Okay, so we will discuss this redemption portion afterwards. Okay, but still let me tell you in brief that by redemption we mean that we are repaying the debenture holders. Okay, because whenever we take whenever we issue debentures to the public, it is actually called external liability. Okay, so it is a liability which you have obtained from the public, so you have to pay back to the public after a certain period of time. Let it be like 2 years or 3 years, 5 years, 10 years. Okay, so you have to pay back. Okay, so there was a mistake in the PDF. Okay, so this is the corrected one. I'll be sending you anyway. So this is the first entry when you receive the application and allotment money. Okay, we have already discussed that when we receive entire money on time of application, it will be written as application and allotment account. Okay, be it debenture or shares. Okay, now when we transfer this money to 12% debentures account, it will be like this. Okay, debenture application and allotment account, debit to 12% debentures account. Okay, so it has been mentioned here that company, okay, let us read the question. According to the terms of issue, interest on debentures is payable annually on 31st March. Tax deducted at source is 20%. So you are required to pass journal entries for the year ended 2018 to 2019. So, okay, the date. Okay. Now you can see here. Okay, so we will just pass these three entries, okay, related with uh, interest. Okay, so as you can see here, this rate, okay, this 12%, okay, this 12%, it is the rate of interest on debentures. Okay, so 12% of 8 lakh will be 96,000. Let me take you to the calculator also. So this 8 lakh, okay, into 12% will be 96,000. Okay, so this 96,000 is the interest on debentures. So when you write the entry, it will be recorded as debenture interest account debit to debenture holders account to TDS payable. So by TDS payable we mean tax deducted at source. Okay, so now this tax deducted at source is 20%. Okay, so you have to depend upon the question for this rate. Okay, so it can be 20%, 18%, okay, 22%, 25%. So it will be mentioned out there. Okay, so the TDS calculated here is 20%. So 20% of 96,000 will be 19,200. Okay, let me take you to this calculator one more time. Okay, now 96,000. Okay, where is that? Okay, so this 96,000 into, okay, 20, sorry, 20% will be 19,200. Okay, so you can see here. Okay, the interest uh, due on debentures was 96,000. Okay, out of which 19,200 is your TDS to be payable, and ultimately after deducting the tax, the debenture holders will get 76,800 as interest on debentures. Okay, after deduction of tax. Okay, so this is your entry for that. Okay, so you can use the calculator also. Now this is your first entry for interest on debentures to be due. Okay, and when we pay off the debentures, sorry, this interest on debentures, the entry will be this: debenture holders account debit, TDS payable account debit to bank account. Okay, we pay interest to the debenture holders after TDS of 20%, rupees 76,800. Okay, but the tax paid was 19,200. Okay, and this interest on debenture is the loss for a company. Okay, so it should be transferred to statement of profit and loss. Okay, so this interest, you can see here, this in debenture interest, it was debited here. Okay, and ultimately when you write off to the statement of profit and loss, it will appear in the credit side. Okay, so this is your entry for question number 4.